Good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading's Miami office down in sunny South Florida. Today's date is Thursday, April the 11th, 2013, and here is today's After the Bell market summary brought to you by WallStreetTrading.com. I want to first start by taking a look to see how the indices closed the session out here for the day. The Dow Jones was up close to 63 points. The Nasdaq was up close to 3 points, and the S&P 500 was up a little over 5.5 points. If we take a look at the breadth on the market today, we had 3,368 issues advancing on the NYSE, Nasdaq, and the Amex. We had 2,718 issues declining on the NYSE, Nasdaq, and the Amex. Another statistic here for today that I wanted to show you guys is that we had 950 new issues on the NYSE, Nasdaq, and the Amex advancing to new highs, and we had 78 issues advancing to new lows here. If we take a look at the SPY for the day here, SPY closed at 159.19. It was up 52 cents for the day here, up 0.33%. Again, guys, the trend is to the top side here. Like I explained to you guys last time, ever since we were able to hold above this 153 level, all right, we were neutral on the market. And then for the past 1, 2, 3, 4, 5, 6 weeks, we were pretty much trading in a sideways range, building up some momentum to possibly break past these highs, which you can see we did. All-time highs on the SPY was 157.52, and you can see we're currently at 159.19. Now, since we're making all-time highs, everybody's looking for targets, right? So what targets are we going to work off of? Well, if you guys know, when you break a downward trend line, we usually come to that downward trend line to back test it. The most relevant downtrend line that we have on this chart right here is this this upward trend line is the trend line from right here in June to this low right here in July, this little trend line right here in October that we broke. So now I'm possibly looking for a back test of that trend line up there, which will take it up towards 162. So we could in fact have a nice little power trend up there. Again, that could happen tomorrow into next week. You know, if that does not happen, we consolidate a bit, fine. But that's my next target on the SPY up here towards 162.67 using that trend line. In the short term here, as long as we can hold above this 156.84, since we broke above that range, all right, prior resistance, right, prior resistance now becomes support. So even if we consolidate a bit or try to chop right back down, you want to gauge that 156.84 level. Take a look at the moving averages. They all are starting to curve up back again here, and it looks pretty good. So that looks good on the SPY. If you take a look at the triple Qs here for the Nasdaq, all right, the triple Qs they were down 2 cents, pretty much flat. All right, down 0.04%. Again, pretty much flat. A little consolidation day. Was not able to do a after the bell market summary video yesterday, so I wanted to show you guys exactly what took place today here. And again, you can see that we have that nice little range that we were mentioning in the triple Qs. A lot of people got shaken out from the gap down. We broke right back above the little trend line from the bearish rising wedge, and that's what's caused the short squeeze. So even on the triple Qs now, we have a nice little level to work off of. That level is going to be 69. Same thing here, prior resistance now becomes support. So on the triple Qs, we could consolidate a little bit more and flag up a bit, but even if we pull back, we're going to be looking for that 69 level to hold as support. If we break back below 69, then and we hold below 69, we're going to be looking for this thing to pull back in. So those are your levels to watch here. That trend line that's acting as resistance is from these little highs right here. So again, levels to watch on the Qs. Now that I look at my weekly chart, let me bring the weekly chart over for you guys real quick. All right, and the monthly chart has some resistance around 70.58. That comes from the high that we made back here in September. So if we break past 70.58, the triple Qs will be making new 52-week highs here, and you know, we will be in this nice little upward channel. All right, and this will be a nice little breakout. So from a consolidation that's been taking place between 64, 65, call it, and 70, a little $5 range we've been trading on triple Qs. That's been taking place for the past 1, 2, 3, 4, 5, 6, 7, 8 months. So therefore, we're going to be doing a lot of research, looking for technology stocks, looking for some of these stocks that are heavily weighted in the Qs that are set up for buy patterns on the weekly charts, and we'll talk more about that in the weekend review video. All right, so let's go and take a look at the IWM. The IWM had a nice little power move again today, along with the ES or the SPY. Closed a little bit off the highs, and we did not make new all-time highs in the Russell 2000. But the Russell 2000, of course, has been the leader, so it's cooling down a bit right now. And now we have the SPY leading the way, and the Dow Jones, and then we have the Nasdaq, which is looking to do some catch up there. So we want to make sure we do some research on some technology stocks. Let's take a look at the currencies now. Taking a look at the dollar futures here to see what the dollar did today. I've been talking about the dollar futures getting some weakness. We're still getting that weakness here in the dollar. We have a nice little upward rising channel right here. Looking for this to break down. This kind of looks like a rounding top, if you ask me. All right, but this is going to get some more traction to the downside once we break below 82 and hold. If we hold this little 82, which is some short-term support, we're going to be looking for this dollar to bounce right back up, and that could cause a little pullback action in the equity markets. All right, let's go ahead and take a look at the euro dollar here, euro over USD. All right, we've been nailing this one left and right. We don't trade currencies, of course. We just track them to to track along with the equity markets. Fix this up real quick for you guys here. Zoom in. And take a look at this, guys. I haven't shown you guys this chart in a while, but we did hold that bottom of the channel right there on the euro dollar. All right, then we broke right back above the range, and so far, this has been going up for the past 1, 2, 3, 4, 5 sessions or so. So it looks pretty good. One thing you got to be wary about though is this little resistance that's going to be coming in from this little channel that I have in right here. All right, which comes from this little consolidation breakdown that we had right here. I don't want to get too much into detail on the euro dollar because we don't even trade it. We just use it as a gauge, so I'll just leave it like that. Let's go and take a look at the commodity sectors here real quick, starting off with the gold futures. We got a nice little bounce in gold earlier in the week, which kind of convinced a lot of people that gold was going to go back to the top side, but that did not happen. All right, that did not happen at all. You can see gold was up a little bit earlier in the week and got rejected right back down. Got rejected from this 20-day moving average right here, and now we're in a short-term range between 1550 and this 1590 level here. So we're talking about a 40-point range on the dollar futures. Now, I know a lot of you guys watch a GLD, so we'll take a look at that here shortly. But on the gold futures, the key level to watch here is going to be this 1565 level. All right, if we can hold above 1565 for the next couple weeks or so, I think this could be a nice little short-term bottom to play in gold. Right now, it's still chopping around, shaking out some weak hands, and we just have to keep on watching it. Now, again, some of you guys watch the GLD, so I'll take a look at the GLD here real quick with you all. GLD, some short-term support around this 150 area. Okay, some short-term support around this 150 area. Let me take these drawings off. Let's see, actually, the low that we made last week. 1 second. This low that we made last week was 149.45. And this upper resistance that we have that I've been showing you guys is right here at 156.42. So a lot of the traders that are in this position here, they're probably getting chopped up around here because some people are probably trying to play it around this little reference level from right here from the earlier range that we had. All right, and if you can see here, what they've been doing at the bottom of that little range is chopping everybody up. So GLD, gold sector that I will stay away from right now. Let's go ahead and take a look at the gold miners to see how they did. They had a nice little bounce the other day. ABX had some news come out, I believe, yesterday. That stock had got smoked, and now it looks to have some more downside action in that name, especially if it doesn't break back above 36. So this stock is looking weak in the gold mining sector. I'm sorry, this gold mining sector is looking weak, like it wants to go lower. If we continue to hold below 36, look for this thing to break down. Like I showed you guys on the weekly charts and the monthly charts, this GDX has some support around 32.53. All right, that comes from the 2009 levels right here, and we can have a little bit 2 more points to the downside on the GDX before they start looking a little bit more attractive. Right now, they look like they're trying to shake out some weak hands, but we do have some little short-term support. We do have some nice long-term support from 2009 that's going to be coming into play there pretty soon. In the short term, though, it looks like they want to push back down, and I would watch that 32 level. If we take a look at the SLV, SLV's been stair-stepping its way lower. SLV does have some little short-term resistance right here at 27.50, and also you can see it's respecting the declining 20-day simple and exponential moving average. I would stay away from the precious metals right now. They do not look like they're in favor. Taking a look at crude oil futures, was trading strong here in the recently in the past couple of weeks. It's been under some selling pressure recently. Not sure if it's from the Korea news. Not sure if it's from some of the economic news that we have been getting out, showing that the growth is kind of slowing down a bit. But just last week or 2 weeks ago, this thing was looking like it was going to get ready to break over 98. We do know that 98 has been some short-term resistance here. All right, a little triple top action right here. And we do know that 92 is a reference level to work off of. And we also know that 94 is a key level as well, because every time we get above 94, they buy it. Every time we get below 94, they sell it. Above 94, they buy it. Below 94, they sell it. So if you're watching the crude oil and you trade the crude oil futures, or you watch the USO offer crude oil futures, or you watch energy stocks of crude oil futures, you want to make sure you pay close attention to this 92 level here. Pay close attention to 94 and pay close attention to 98. All right, as far as it goes for USO terms for those ETF players out there. All right, let's take a look at the USO. For the ETF players out there via the USO, USO has some short-term support around the 33 level. All right, some short-term resistance around 34.50 from our little range that we had right here at the top. That you can see we tried to break above that 34.50 level last week and we fell. So some trap action right here, some bull trap action right there, and we have some short-term resistance around 34. So 34 level to work off of, and 33. So a dollar range. This USO has been trading in for the past 6 sessions or so. All right, what else did I want to cover? The volatility index real quick, the VIX. Again, I'm just getting back into my mojo here, back at the Miami office. So I know I have not been consistent with the videos like I usually am. But you know, we're getting back up to speed over here. Just getting situated in a new office here. In any case, on the volatility index, let's see. On the volatility index, let's zoom this out real quick. On the volatility index, you want to watch that $12 level there. If we break back below 12 and we hold below 12, the VIX can move all the way back down towards 11, as there just seems to be no fear in the market. And I think that could continue. Why? Because if you take a look at the triple Qs, you guys know the triple Qs have been the laggard group, and if they break out of this little, if they break out above 70 and hold, all right, that means that everybody else probably positioning themselves for this little rising bear wedge is going to get squeezed. And anybody that was short the market on the gap down from Friday's jobs number below that little break of the trend line, if they haven't got squeezed already from this little action we have had in the past couple of days, they're going to get squeezed when we do really get a big breakout. So triple Qs looks interesting. I'm going to be doing some more research tonight on some technology stocks, and I'll keep you guys posted. You want to make sure you get involved in the trading room, mywallstreettv.com. To get the credentials to log into mywallstreettv.com, you want to go to wallstreettrading.com and fill out the form on the right-hand side. All right, so let's go ahead and talk about some key stocks today. Some key stocks on the radar that were strong was Netflix. Netflix was one of the stronger stocks in the market today. You got to watch this one for follow through. You know, it held this nice little 160 level. Hold on one second, my chart's frozen. LinkedIn was strong today. Netflix was strong today. Let's see here. All right, so Netflix looks like it should come back and retest this 180 area. That was a breakdown from the range. As you guys know, prior support becomes resistance, and they usually like to go back and back test that level. So I would be looking for Netflix to try to get one more push up, especially since it was showing some relative strength today, up towards that 180 level. LinkedIn, it's a nice little power stock in the market here, up $2.87. This one has a breakout over 185. You take a look at the 60-minute chart on this one here. This one could be setting up for tomorrow to buy in the first 30 minutes. Why? Because it broke out of this nice little consolidation right here, this nice little tight pattern, triangle pattern right here. Broke out, pulled back to the rising 8 EMA, the fast short-term trend line that I use, moving average that I use on the hourly chart. And if we can hold this nice little base here around 179, we're going to be looking for that nice little move higher, and then that momentum to come in once it breaks past 182. All right, and then of course once it breaks past today's highs around 183, we should definitely see some momentum come in there. So this stock looks pretty good. Keep an eye on LinkedIn. What else did we have going on today? Energy stocks were strong. One of the strong energy stocks out there was Oxy, OXY, Occidental Petroleum. This thing's finally breaking above its 200-day moving average. If we can stabilize above the 200-day moving average, and we could break out over this level right here, which happens to be lined up with today's highs around 83.50. So if we could break above, sorry, not 83.50, 84.74. So call it 84.75. Really, if we could get above 85, folks, we could have a nice little, we have all this little space right here, all the way from 85 to 87 to make a nice little move to the top side. So I would definitely keep an eye on this Oxy. Had a nice little volume bar today, and looks good. I'm not sure if this is news related or not. I can easily find out though if I bring up my pre-market charts here real quick. and it looks like it was news related from pre-market as it ran up pre-market. So pretty much this one ran up pre-market and pretty much chopped around for the whole day. So if you were involved in the stock today, you most likely got chopped up. You probably caught some of this action right here, but in general, if you zoom out the chart, this thing really just had a little sideways consolidation day. So some people are going to be looking for the stock for a follow through tomorrow. Again, some energy stocks were strong. You can take a look at Halliburton, aka Halliburton. Halliburton had a nice little move. This one has a nice little bullish falling channel in it. All right. Take a look at this trend line right here. Little trend line right here. This is a nice clean pattern, folks. If we were to break past today's highs with some volume, this could be a nice little breakout for a continuation off the move that it had earlier in the year. So Halliburton is on my A list to the bull watch list. Of course, if Halliburton looks good, we want to make sure you take a look at the other names. So take a look at Rig, R-I-G. See how Rig's looking. Rig, gapped up. Was up here at 59.26. Call it 59 back here in mid-February. And now it's back at 51.87. We're going to be looking for this one to catch some traction as well. And even this name is breaking this nice little downward channel action that we have right here. All right, folks. So keep an eye on Rig. Another name out there that you can watch is NE, which has been trading pretty strong. I didn't take a look at it today. All right, and they have earnings coming out next week, but they had this nice little power bar right here. So a lot of people are working off this little power bar. Let's take a look at DO to see what DO is doing. Another name that's in that sector. DO looks pretty decent as well. All right, for the past couple weeks, it's been trading in the range between 67, all right, and 71. Call it. If we could get a break back above 71, we could maybe look for these buyers that were coming in earlier in the year. Try to step back in and take us back towards those highs. Again, moving averages are curving up, so it looks pretty decent. Of course, you guys want to hear about Apple, so let's go ahead and do a little quick analysis on Apple for you guys out there. Apple down $1.36 today, still trying to catch some traction. Has some short-term support around 420. They also have earnings coming out in 2 weeks. This is a stock that I would stay away from. I don't see anything interesting there. Take a look at Amazon. Amazon's looking pretty good, guys. This will be the stock to go to if the technology sector or the triple Qs breaks out. You can see Amazon has a nice little confirmation close over 267.53. It's a good company. They do have earnings coming out in 2 weeks. Technical, based on the technicals, thing has some nice support down here around the 255 area. Has some nice solid resistance around 285. And in general, take a look at the thing. You take a look at the chart here. Take a look at the thing. Take a look at the chart here. You can see it's trading in a nice little clean range. All right, a wide range that is. It's trading in the $32 range here. But now you have a nice little W pattern that's forming right here in the chart. And we got a nice little close over this little pivot high that we had right here that caused this little downdraft when we're selling. So keep an eye on Amazon. Amazon looks pretty decent. Let me take a look what IBM did today. We do know that IBM is one of the other strong technology stocks that looks pretty good. Of course, I talked about this last month, showing you guys that IBM is actually breaking out of a yearly range here. This is the monthly chart, by the way. This stock's been trading sideways for the past year, 2 months here, and holding above 210. You want to have IBM, I would say, in your portfolio as long as these technology stocks continue to catch a bid here like they are. IBM, Amazon, I think those are going to be some go-to stocks. Let me take a look at eBay real quick to see how eBay's looking. eBay was one of the other stocks. eBay was one of the other names in the sector that looks pretty good. Yeah, eBay. eBay's back at the highs here. eBay is close to making new all-time highs. New all-time highs on eBay is around 59.21. We're actually at 57.78. They have earnings coming out next week on the 17th. And if I take a look at the 60-minute chart here real quick. Sorry, it's been a long day. This one consolidated today. All right. eBay. This one traded in the range today between 57.60 and 58, a 40-cent range in the stock. So tomorrow, if the stock was to gap up and then fade to 58, that could be an area to look for a buy. Or if the stock was to open up flat, fade down a bit towards this 57.60, that could be a good buy for a move back up. If the stock was to break down and hold below 57.60, then this thing could fade all the way back down to 57.30. So, no, 57.30, sorry, 56. 57 that's 57.20. Sorry about that. So we'll have some of these stocks to watch tomorrow. If you want to see how we trade them, make sure you go to the website wallstreettrading.com and sign up for your 14-day free trial to My Wall Street TV. Have a great day, folks. If you're in the Miami area and you would like to come by and check out the office, just shoot me an email, ccooper@wallstreettrading.com, and we'll go from there. Have a great day. Cheers.